Hello and welcome to my channel. Today I wanted to give an update on the global markets downturn analysis that I posted on 17 October. If you have also followed me on TradingView, you will already be updated on what's happening since I've published my idea over there. For those of you who haven't, I urge you to follow me on TradingView too, because sometimes updates are just too short to be worth making a video on. Now, let's get into the analysis proper. We'll start with a quick overview on the indices. Right, so over here you see the Nasdaq. It has moved horizontally into a triangle. S&P 500 was in a wedge that it has already broken down. This is the Nikkei 225, which has also broken down from two formations. And then we have this Russell 2000, right? So it did a push up before coming down in a straight line for this week. Then we have China, which basically hasn't really moved much. And also Hong Kong, which is also following China quite closely. Now, I will not be talking about China or Hong Kong in this video, not in detail. And the main reason is because I think that when the US market crash, it will bring down global equities, including China and Hong Kong. For those of you who are really interested to hear my view on these two markets, drop me a comment. Now, let's start with Nasdaq. Looking at this, you'll see that I've already drawn this 5-wave up, which actually is in itself a wedge, right? So over here, if you go into the details, you'll see that there is actually another 5-wave down since 14 October, which is last Monday. So if I have to draw this, it will look something like this. 1, 2, 3, 4, and 5. Now let me put up this wave so that it's easier to see. Maybe make it thicker. Right, so this is the wave up. And then we also have an ABC. Now this will be wave 1 and wave 2. And now over here you have a minute wave 1 and then a wave 2. And so I'm expecting that we will go down into a wave 3. Now there's something interesting over here which happened last night, which is the push up since I will believe this is around 11:30. So let's go down to the 15 minutes chart. So what you can see recently is that during the pre-markets, it seems that they have been trying to push up the market so that you will open high, right? And then they will do a sell down, right? High and then a sell down. So this is, to me, it looks like those strong hand trying to unload into the markets. So you push up during the pre-markets and unload during the opening. Right, then you see over here from 11:15, right? It actually was being pushed up in a straight line. So this to me is looks like stop hunting, right? So you have already done a short here, you will most likely have a stop loss at the resistance area over here, right? So to me, this is a stop hunting. Now, if you have followed me on the TradingView, you will note that I will actually call for a short somewhere around here and a trendline break of this green color trend line. So what happens is that it did break, but then it actually bounced back up. And now this trend line is useless. And we have to look at this red color trend line. So this trend line is updated. But then there is actually another trend line breakdown over here, which is the purple one. So this actually belongs to the to this smaller wedge within the bigger wedge. So this is the trend line that we're looking for. That if you're aggressive, you will do a short here. But the more important one is actually this horizontal breakdown, which is around 20,062. By the way, this is the CFD from November, right? So if it breaks down, we are looking at a few targets over here. These are all previous points that we are using as support, right? With the exception of the second target, which actually is a Fibonacci retracement at 50%, right? Around 50%. Just I put it a bit higher to be more conservative. So this is for Nasdaq, right? We will be waiting for breaking of the trend lines before we enter our short. Or if you have the risk appetite, you can enter short here or do some scaling in. Now let's look at the S&P 500. As I mentioned earlier, S&P 500 has already broken down, right? It has a similar wave count as the Nasdaq, but it also suffer from the same problems as Nasdaq, which is that it somehow feels like it's not allowed to fall, right? At least until the presidential election is over, right? So or Kamala amid defeat, which is not going to happen, right? But what we are going to see over here is that they will continue to have attempts to push up this index. But what I personally think is that they will not succeed towards the election, right? That means they will fail. They will fail on the last leg, right? So this market should come crashing down before the election, right? Yeah, but that's that political study aside. This is the alert wave count, right? We also have a 5-wave down, 3-wave up, and then we have a down, up, and then down. So today we should actually see it hitting 8513, right? So this is for S&P 500, right? Take note that it has already broken down. Okay. Nikkei 225 is a bit more interesting. On my last analysis, right? Let's move back to here, and you can see that over here I have this. I mentioned that there is a head and shoulders, and then there is a descending triangle that happened. So it's also over here, right? It has really broken down, right? I also mentioned that when I was publishing this idea, it was around here, right? I mentioned to enter here at the upper trend line, and when it breaks down. So this is a fake breakdown, right? But still fine if you are scaling in and you're able to hold your position. You have made a profit, right? The next thing to look at is actually the resistance zone over here, right? This resistance zone, you need to be careful. It's not that you will immediately take profit, but it's good to monitor what happens over at this resistance zone here, which is around 7,800. Okay, so that is for Nikkei 225. Also take note that Nikkei 225 has also completed a 5-way structure over here, right? And the bigger structure is either ABC, which is also a wedge. Now we look at the IWM, which is the Russell 2000. For this one, I need to reiterate that it has been in the bear market since November 2021. And this entire move up is actually a corrective move. And over here, if you notice, on the 31st of July, it made this high here. But since then, it moved down and moved up again. This itself is also like a wedge, right? So let me just draw this. Don't mind this breaking up, it doesn't really matter, right? So if you look at this is actually a triple combination move up. So it's 1, 2, 3, 4, 5, or rather a WXYXZ, right? So let me just draw this quickly. Similarly, we can wait for a breakdown of this trend line before we enter short. But my suggestion is that if you are already watching this video and price is good, you can actually enter because the stop loss is actually somewhere around here, 2306. Right, we just use this as a more conservative target, even though over here is so fine. Right, so IWM itself, it may just go down by itself because I don't see any political will to push this up, right? Because everyone is just referencing S&P 500 and Nasdaq, which is why I think that uh, if you have the capacity, you can actually start shorting this IWM. Right, so that is for these four indices. I mentioned I will not go into China and Hong Kong, but if you need me to talk about it, please feel free to comment and let me know. Thank you.